Results out from Allied Technologies this morning showed revenue steady at 9.2 billion rand for the year to February, while adjusted headline earnings a share rose 2% to 605 cents. Analysts at Frost Sullivan say the group has enjoyed the benefits of maintaining a positive outlook despite a tough economic environment, and it's also continued to look for acquisitions to increase its presence in the lucrative East African region. Well, joining with his take is Altech CEO Craig Venter. Craig, thanks for coming in today.
Pleasure.
Of course, Craig, it takes more than a positive outlook to beat the recession, and whereas you might have seen that in some parts of your business, you have been looking at new growth areas. Tell us a bit about that.
I think, yes, we felt that the new growth areas in East Africa were absolutely critical. And I think, as you've seen, we put in a pretty solid infrastructure. We bought into that East African business about 2 years ago. We've expanded it now to 6 East African countries. So we've added Burundi and the DRC to the footprint. And I think the results coming out of that region, as you said, are quite explosive and are very good. So we are really consolidating our fibre network across those 6 countries, and it's working very well.
Obviously coming off of a low base, though, because the cash cows in the business have traditionally been Netstar, Autopage, businesses like that.
Yes.
Are you starting to see them turn around as consumers get back on a steadier footing?
You know, what we've seen this year, and which was so pleasing for me, is that our existing stable cash cow kind of businesses, Autopage, Cellular, Netstar, still performed exceptionally well. We didn't see 20–30% growth in those businesses, but we still grew, and we did quite well in those areas. So the existing businesses did very well. And as I've said before on CNBC, the growth engine for the Altech Group is most surely our East African operations. So that footprint, we made about 200 million rands worth of profit out of East Africa, where 2 years ago we had zero profit coming from that area. So we bought in at the right time. I think that, yes, it's come off a relatively low base, but for the first 6 months the profits quadrupled, then they doubled, and then now we've seen growth again this year. So I'm very pleased with those results.
Well, you say the growth engine of the business, the East African growing network there. Does that mean we're not going to get back to the 20–30% growth that we saw from some of your local operations, your Netstars and your Autopages going forward? Is that a more mature business where we're going to see lower growth going forward?
I would think, you're probably accurate. I mean, we have significant market shares here locally in those established businesses like Autopage, Cellular, and like Netstar. We have commanding market share leads in many of those businesses. In Netstar, we have 44% market share in South Africa. So I think Netstar could show those kind of growth rates at 20% levels if it does its globalization strategy correctly. And we're in the process now of looking at entering the South American market, which is Brazil, where for theft and hijacking, the percentages are actually double what South Africa is. So we see that as a huge growth market, and we're in the process of actually doing something in Brazil. So I think that we could see the growth rates from our established businesses, and most surely from our East African footprint. We see double-digit growth going forward there in similar regions of 20%.
Of course, with the East African footprint, you targeted Kenya, which of course is one of the most mature markets in East Africa. How about West Africa? There must be huge growth opportunities in countries like Nigeria for you.
Yes, we already as Altech are established in Nigeria. We've got a business in Lagos in Nigeria. It's a business that makes us 50 million rands profit before tax a year. It's a good business. But as you say, the footprint that we've got in East Africa for laying terrestrial fibre throughout 6 East African countries, it would be great to do that in Nigeria as well. I think that what I'm cognizant of as a CEO is that it's important that we bed down very solidly what we've got right now, and then look at expanding into maybe the likes of Nigeria and other countries in Africa. I think building a network of terrestrial fibre, as we know, in one country is a big job, never mind 6 countries in East Africa. So we've done 6, we are almost complete, and we will be moving on to other countries in Africa as we progress.
How does this network of terrestrial fibre that you're laying in East Africa tie in with your investment in Seacom last year?
Yes.
Because there must be some opportunities there for you.
They're great opportunities. I think one of the reasons why we felt we had to invest on both sides of the equation You know, it's fine to have the best terrestrial fiber network in the country that you're operating in. However, if you do not have the big pipe coming in, which is the bandwidth that feeds that terrestrial fiber network, you actually potentially won't get the benefits that you need of speed, bandwidth speed in broadband, etc., etc. So we actually felt that we needed to invest in not only one undersea cable, but two. So as you know, we bought a significant amount of bandwidth from Seacom. They invested in our network in Kenya as well. And at the same time, we own 11% of Teams, which is the Kenyan government undersea cable. So we have the best, I believe, of both worlds. We have the terrestrial fiber network in 6 countries. You take that and you plug it into the Seacom and Teams undersea cable, and then you will see the benefits of price for the consumer, and you will definitely see the bandwidth speeds increase quite significantly. So we are really seeing the benefits in that East African region.
Will you be looking at more acquisitions in that market?
Yes, I think that there are a few that we are looking at, I think, to complement what we have. But again, we're very cognizant of the fact that we need to bed down what we've got. We, like I say, we made 200 million profit before tax out of that market this last year. And I think, yes, we would probably look at 1 or 2 acquisitions to complement things going forward.
Now, Craig, your share's a little bit under pressure today, down at 71 Rand 50, a loss of about 3%. So maybe the South African investors looking more at the local businesses and their performances. I mean, Altech, Autopage Cellular, revenue's up 6.3%, so reasonable there. Operating margins down a little bit. How about the prospects for that, though, with mobile termination rates being slashed? Does that have an impact on your business going forward?
You know, I think the interconnect rates being slashed, as you correctly say, has changed the environment in the GSM market, most surely for the network operators such as MTN, Vodacom and Cell C. They affected directly. Altech, Autopage Cellular, does not sign interconnect agreements, so we are not directly affected negatively. And I think what is important is that parts of our business, a small part of our business, probably in the least cost routing side of the business, potentially could have a slight downside effect. So we looked, we see that as being a maximum about a 10 million Rand profit deficit from what we've had in the past in terms of the interconnect cuts. So we see and believe that looking at cutting the costs a little bit at Autopage, which we've always as a group been very cost conscious, and I think you've seen that from the results. You know, we're operating in a very difficult environment economically, worst global depression we've seen for many years, and basically Altech is still showing positive growth. Most corporates I'm seeing are showing negative growth year on year. So our cost bases are at the right levels within Altech. So we even cut costs even further at Autopage, and I believe that we will still this year be able to hold our own at Autopage and so show some growth.